Everybody, what's going on? How you doing? Travis with the spoon. Trade with Travis. Another day, another dollar. Let's make sure we end up getting it. It is 7:03 a.m. I have 216. This is another session where we're going to end up taking a look at some overall trading activity, see if we can be able to find something. If you missed me yesterday, I do apologize for not showing up. Obviously, I'm a teacher, so our schedule and everything else is about to change. If you're a part of North Carolina Public Schools, you actually know. I mean, obviously, when it comes down to that. But I figured that we could be able to hop on, be able to talk about what my schedule is going to end up being for the rest of this week, moving forward into next week, and how the schedule is actually going to end up changing for our live sessions and everything else like that. But with that being said, happy to be able to get started with everybody. And be able to look at some overall trading activity. Once again, this is a 30-minute live session where we end up looking at Forex trading, do a little bit of analysis and see if we can be able to get in, see if we can be able to find some overall trading opportunity and stuff like that. So happy everyone is actually here. For the people that are watching this live, once again, thank you for being able to hop in. All I will ask you to do is basically make sure that you end up dropping in a like and make sure that you end up sharing the video for me, so we can be able to go from there. Obviously that helps grow the overall channel, grow the overall community and everything else. Before we end up getting started, two things. One, at the end of this week, I'm going to end up doing an advanced trading session. I'm actually going to end up doing it live. We're going to end up doing a advanced hedging session where we talk about the indices market like NAS 100 and US 30, XPX 500, and how to be able to hedge off of those markets. That's going to be a totally free session. I'm going to end up doing it on the 19th. I'm going to end up doing it, probably going to end up doing it right around 8 p.m. That'll allow everybody to kind of get relaxed and everything else like that. We're going to end up going from 8 to 9. Once again, that's just a free session for everyone to be able to learn something that I want to end up saying thank you to everyone that basically ends up watching these videos to end up helping you out when it comes down to your overall trading activity and being able to get started from there. Now, once again, if you have not traded with us before, you can go to cartercowcapital.com/start here and be able to hop in and get one of your and be able to get a free webinar, get a free book, and everything else like that. So with that being said, let's go ahead and hop onto the charts to see what's going on, and then after that we can kind of go from there. So what's happening this week? We looked at yesterday. Yesterday was a very slow day, and I was actually kind of happy that I ended up taking the day off because really there wasn't any movement to be able to take. We still have some open trades like the New Zealand dollar, United States dollar that we're still in. Got into Bitcoin at one point, and I think that my EA actually ended up taking me out of that at one point as well. We are in a few trades, and we're probably going to have to make a decision on US Swiss franc because it has been a problem child at this particular point. So we'll take a look at that as we go through. All right, now earlier this morning, what we end up having with the ZEW survey, which is economic sentiment, we end up having a GDP for the Eurozone as well. Going into today, we're going to end up having Fed Bowman's speech. I think this is going to end up being the first time that he's going to end up, well, she's going to end up speaking and being able to go from there. So we'll see what happens a little bit later on today. But today is supposed to be somewhat of a trader's day when it comes down to that movement. And without any further ado, let's go ahead and take a look at the overall open trade that we end up having, which was US Swiss franc. We're going to talk about why we end up getting in the trade. We're going to talk about what's my decision on what we're going to end up doing. And then after that, go from there. So we look at it from a weekly candlestick. Going into this trade, the one thing that I ended up saying was that, this market overall is considered to be bearish, but a broken counter trend line break bullish, and we end up going through and we had this overall trading plan where our stop loss was at 68.30 and our take profit was at 91.35. If we go to the weekly, we can see that the market is bearish, and there's a D extension that's expected to be that's expected to hit overall, and I can get, matter of fact, I can get rid of this right here because the A was broken. So let's try this again. We're going to start right here for our overall movement. Our D extension on this one is at 86.60. So the market is bearish and it's on a weekly R3. And that really changes things now when you end up looking at it from a weekly perspective, but we'll talk about that a little bit more. And going to the daily, what we can end up seeing was that we end up having that counter trend line break bullish, but then after that, the market end up making a new lower low. Now, anytime that you end up making a new lower low, even though the market is still in a Fibonacci move or anything else like that, especially depending on the area that you end up getting it in. We talk about trying to be able to get value as much as possible when it comes down to trading, especially inside of our masterclass, where we really want to focus in on being able to trade in these areas. Because if we do lose, we only want to lose a little, and we want to end up making a lot when it comes down to this move. But there's also some warning areas when you end up paying attention towards this move as well. The first warning area, the first warning move is a new lower low. Now you notice right now at the beginning of the day, we have that new lower low that's beginning to start off the day, which is not necessarily the greatest thing to be able to look at when you're talking about trading in the first place. So from there, the next possible move when you end up paying attention to a move like that will always be, okay, what's happening with the 2 hour? Are we in the buy zone? Are we going to end up having an expected move toward the upside? The market held support for a little bit, broke up, and then after that broke the support from there. If we're looking at a overall movement from this long-term channel that was basically broken from the upside, and then after that pushed back down to the downside, I'm sorry, that not triangle, that wedge, we can see that we're almost close to touching that wedge again toward the upside, in which it touched the wedge, I want to say 2 hours ago. So the question is this: do we get out right now, or do we allow the market to be able to give us a chance just to be able to wait and be a little bit more patient to be able to go, be able to take a chance from there? I'm always accustomed to saying that if you have a plan, you want to end up trading that plan, meaning that yeah, you don't want to lose money, but you also want to be able to stay with a stable plan and see it trade out and see it play out. Because if this market ends up popping up to the upside, then and it moves up to our overall D extension, then you'll be upset because you didn't stay within that overall plan. And so I always go by the rule of three. The rule of three is basically this, and these are get out rules. One, did it break a new lower low? Yes, it did. Two, did the daily change for the overall movement and sentiment at this particular point? The daily was considered to be bullish for that counter trend line break that ended up happening right here, right? But since then, the market has made a new lower low, so that's another yes. So that's 2 out of 3. So anytime that you anytime out of the 3 things that I end up talking about, and the third one is this: it's the market in the buy zone or the sell zone on the daily, and that's obviously a no. The market is in a buy zone off of the daily. When you end up looking at that, then you could be able to make an answer on what you're going to end up doing. So here's this is what I'm looking at right now. If I'm looking at an overall percentage of how much I'm actually down, just for its overall pricing and everything else right now at this particular point in time, I am only down $100 based off of this movement. Okay, now wherever that comes to your account, whatever that looks like when it comes down to your percentage, and that's why we really have a strong equity management plan. Whatever that amounts to, if it's a smaller percentage of your overall account, or if it's 3/4 of the amount that you're willing to be able to lose, then it's your decision on what you're going to end up doing for us being able to get out. Right now, I see that the market is holding right here at this particular point. If it breaks below this overall area, then it's going to stop me out anyway. Okay, so I'm going to hold and I'm going to stay firm because I see that the market is in the buy zone, which means that if it does pop up, we have 7 to 11 days of overall bullish movement. So just going to wait and see how that's going to end up playing out. If I lose, then I lose. If we end up pushing back up and I can be able to break even, then that's great. Then I just put money back in my pocket just for being patient. Okay, so that's what I'm looking at right now for that overall movement. Now, that brings me to what's happening with every other pair and being able to take a look at it. I want to talk about oil because we talked about that a while ago. And if you end up getting in on oil, you'll be very happy about what ended up happening with the overall movement that happened on Monday. I know I wasn't here, but we end up truly seeing that move. U.S. dollar index is basically back at this overall support level where we end up talking about where we want the market to be able to go. Okay, now we can see that it's bouncing off of that overall support level in the buy zone at this particular point in time. Now, if this is true support and resistance, then that means that you should be buying right now in the U.S. dollar, and that means that your overall expectations is because the market is basically bearish, you're going against the overall trend. Because you're going against the overall trend, typically we only take a halfway move off of that. So that means that you just want to buy back up to the halfway move. Longer term, come on. Okay. My youngest just got done eating breakfast. I don't know what the kitchen looks like, but I can't let him sit in there by himself. So give me a second as I give him something to play with. There you go. Sit down. There we go. So As we take a look at this overall chart, we can see that we're at support. And as long as we're at support and this market ends up bouncing up, typically you want to end up going toward the halfway move. The halfway move of 1750 is obviously 1725. I'm going to look at this overall move at 11,709 for the overall move back up to the upside. If it does happen, then that means that one, that puts us back in, should put us back into our overall break-even zone. So right now we're at support. We're at support of this overall move. Obviously, we know that the move long term is actually bearish. But if this is going to end up being support and resistance, and it's going to end up playing to be like that, then obviously being able to take short-term buys may end up being on the table. So that's what I was banking off of on that one. Let's take a look at oil real quick. Oil, we end up saying that the market was going to end up popping up to $65 a barrel. The market actually ended up taking another pop up to $60 a barrel yesterday, and ended up dropping back down. Obviously, this market is in the sell zone. What did I expect? I expected that the market was going to give us a chance to be able to get back in if you did not get in at $52 a barrel. Now, if you did get in at $52 a barrel, quite frankly, stay in it and keep on going until there's a true counter trend line break that has been broken. We take a look at this off of the 2 hour, we can see that the market is basically in the buy zone right here. So for the people that are in and want to look at being able to add on, the question is, should you look at being able to add on? My answer, if you're looking at this from a long-term perspective, based off of my rules and everything else, is no, because the daily's in the sell zone. But I would love to be able to see how this market basically ends up reacting. If it breaks a counter trend line break and it starts to keep on moving up, once again, if we look at what's happening, you go back to common sense. What's happening outside? The weather is cold. What that means? What does that mean? People have to use fuels and different things like that to be able to get their buildings and everything else warm. What does that mean when it comes down to oil prices? Demand is up. What happens when demand is up? Prices go higher. Okay, so you have to keep that in mind when it comes down to being able to look at things like that. So obviously, I would expect that the market would keep on going up toward the upside and then playing off from there. Okay, but once again, if you have not got in, be patient. Allow the market to be able to play towards your overall move. If you never get in, then that's okay. You can be able to find other trading opportunities. Speaking of other trading opportunities, let's take a look at gold. I can hear my other son basically jump off his bed. He just woke up. Jeez. Let's go to the weekly off of gold, because we didn't have a chance to be able to take a look at it before. We said that the market was going to continue to go bearish because we're at the top of this overall channel. And if it's going to keep on moving down, it could move down to 1731. So we're looking at sellable opportunities at this particular point. Right now, whoa, hold on for a second. Everyone give me 1 second, real quick. Real short break. All right, testing. Okay. All right, cool. So we're back. Taking a look at this overall move weekly, we can see that the market is basically in the middle of this overall trading zone. Not necessarily the best area to be able to trade for buying or selling. I would say that when it comes down to this movement. But if we look at the daily, we can see that the daily is really not in a great position to be able to trade either, unless you're looking at selling. If we go based off of what the overall move is, we can say that the overall move is basically selling at this particular point. And you could be able to trade from that standpoint to the downside. Now, remember, long term, we expect for the market to be able to go down to 1731. If I'm looking at any type of trade that'll be selling, obviously we have a counter trend line break that has happened. What would you trade down to? I think the next area that you could be able to trade down to and feel comfortable with is going back to 1804, which is about 1804, which is about 14 points away. If that's something that you're interested in being able to do, I would look at a 2 hour high price and see if you can get it. If you get that, then you can go from there. Currently, the market is at 50%. It's kind of choppy right here. We can see a little bit of support resistance. I'm not necessarily interested in being able to trade that. So I'm going to stay away from taking a look at gold. Let's take a look and see what's going on with the overall screeners. And then after that, we can see if there's anything that we can be able to look at from being able to get in. Currently right now, when we look at it, we have a few things that are over 21 at this particular point. We see that pound CAD is over 21 with an RSI 61. That's not working. We have NZD Australian dollar over at 21 with the RSI at 43, but the stochastic slow at 2.4. That could be interesting to be able to look at. Let's see. We see. Okay, that's the complete opposite. We see 57% with it 99, so that means that they're expecting that the New Zealand dollar is going to end up getting stronger, or start to be able to pick back up. Let's see, Australian Swiss franc 19 at 76. Not really. Pound Swiss franc 61 at 57. Not really. We can look at that at 2 o'clock in the morning. U.S. Swiss franc. We talked about that before. The market has went down to 17, in which we end up getting in when this market was at 19, and it started to push back up. Currently, the market is at 5% when it comes down to the stochastic slow. We're still expecting for this market to be able to push back up, but the volatility has went down. So we have to be able to pay attention towards that as well. So unfortunately, look at how everything's kind of playing out. We don't necessarily have the greatest type of move to be able to take. I could look at the Australian dollar. United States dollars at 63% on the RSI and 98% for the stochastic, meaning that we should see that the market start to push down. But we know overall from looking at that the market is considered to be bullish. Okay, so I'm not gonna pay. There's really no reason to be able to look at those pairs. And that's just being honest, just looking at the numbers before we even go from there. If you're interested in being able to learn how I end up doing that, boys, can we keep it down? Keep it down. If we're looking at it from that standpoint, obviously there's really no overall trading move to be able to take that would make sense unless you're looking at scalping the market. And yes, we could look at that, but we only have 30 minutes on being able to pay attention to every pair. So once again, if you're trying to trade within 30 minutes, just like how I'm trying to work out, do anything else like that, you want to get in, get out, and be able to go from there. So obviously we had that one pair, we had that one trading pair that we ended up getting into, which was New Zealand dollar, United States dollar, which was something that I was comfortable with, and being able to trade from there. And we just stay away from everything else right now. All right, US 30. Let's get into this. Market is bullish. Market is pushing up to 32,520. Currently, the market has went up to the 382 area. The market is definitely in a push zone. Now, we could definitely see that the market is overextended as well, but the market is definitely in a push zone. So, along the way, if you wasn't buying dips on this overall move, then that meant that you basically end up squandering a little bit of an opportunity. Obviously, we end up hedging some of these and end up making moves when the market ends up going down. The question is the market going to give us another chance before it pops up to 32,520 as the overall D extension for us being able to get in? Yesterday, the market was very slow for us being able to make a move on the Sunday to Monday trade. Now, the market has been moving right around 178 points to 121 points to almost 140 points for the last 21 days, which means that the market has been moving pretty slow. But we have seen that it has generated a natural support right around this overall area. So now we have a new area that we can be able to focus in on when it comes down to a new zone. Okay, so I'm going to end up creating this new zone from these overall highs right here to that support right there. There goes your new area. So if the market falls back within this overall area, it will fall back to somewhere around here. Okay? Not necessarily the greatest numbers to be able to pay attention to, but we do know that now 31,450 or 31,350 is an area where the market could pop back up to the upside. Currently right now, the 2 hour is pushing back down to the buy zone. We do not have a counter trend line break as of yet. We can see that we're definitely in the sell zone for the stochastic, or basically moving from the sell zone in the stochastic. and currently right now we can see that there's really no move to be able to make at this particular point in time. So I would kind of see how this market kind of plays currently right now. If I'm saying what type of trade I would do, I wouldn't do anything. I would just stay away. Obviously, we know the market is bullish, so you want to be able to, if you're going to end up taking a bull trade at this particular point, it has to be perfect, especially because the market being in the sell zone. So from right now, I'm going to stay away from that one. All right, Nas 100. Nas 100, if we look at this overall pair.
Open. Thank you.
You're welcome. Nas 100, if we look at this overall pair, what are we looking at? The extension's at 14,320. Market is at 13,388. The market, once again, is pushing up. The market is in the sell zone. The market will, the sell zone portion will probably stay in that area, or will probably stay inside of the sell zone until, don't do that. No, we're not putting that in there. It will probably end up remaining to be in the sell zone before until the D extension ends up getting hit. Okay, so this market is bullish. I'm not looking at a sell trade. I could care less about a sell trade at this particular point. I only want to look to buy. Okay, so that means that if we end up getting any type of push down for us being able to, for any type of retracement move, and we see strong volume for people buying it back up, then that's the area to be able to buy and be able to get in for the rest of these 400 points. Well, I'm sorry, for the rest of these 500 to 400 points that's going to end up being left. Okay, so let's take a look at the 2 hour. And you look at the 2 hour. If I delete that, we've been basically hedging all the way through on buys and sells, but ultimately the zones have remained to be the same. Obviously, the market has fell back, and there's really no zone to be able to pay attention to. There really hasn't been. It's a small support right here, but I'm not going to consider that to be anything as of yet. The market is close to the D extension. Currently, the market is at currently the market, when it comes down to the 2 hour move, has not hit yet. If I'm banking on anything for the overall trade, it will be buys. But the question is, do you want to get into a buy right now for this move? We're going to say no. So I'm going to stay away from that one as well. So that actually makes the day pretty simple. There's really nothing to do, and kind of sitting on our hands until we end up finding opportunities. If there's some opportunity that ends up showing up a little bit later on today, you end up getting an update, especially if you're part of our master class or any one of our overall trading academies. Whether it's the Carter Cal Academy and everything else like that. Hey. Whether it's the Carter Cal Academy or anything else like that. I'm just going to stay away, and I'm going to kind of sit on my hands right now. There's really no trade to be able to take from here. While I still have y'all here, if you're interested in being able to see what we're doing for us, any other videos, make sure that you end up going to my Facebook page. Obviously, that's Travis Witherspoon, or go to Carter Cal Trading and see what we're doing online there. Please remember that, obviously, this Friday we're going to end up having a hedging basically quick seminar on being able to do that, what it is, how you be able to trade off of it, how can you be able to make money off of it. You're interested in being able to hop inside of our academy, you can go to our Carter Cal Academy, you can go to our Carter Cal Capital page, make sure that you end up liking it. You end up getting a link to the Carter Cal Academy, or an invite to the Carter Cal Academy, and then after that you end up seeing some of the videos and everything else that's from there. That's a private group. If you like what we end up doing, please make sure that you end up like, share, subscribing, like always. And I see each and every one of y'all tomorrow in the next video. Hopefully we can be able to find some trading opportunity. Remember, U.S. Swiss franc, I'm still staying in. I'm going to see how the market kind of reacts off of today. Maybe we can be able to get some of my money back. If not, remember your 3 get out areas. Right now it's at 2 out of the 3. And if it keeps on breaking below that overall area that we end up talking about, then obviously this cut your losses short. And then after that, we can find another trading opportunity. All right, everyone, plan your trade your plan. Take it easy. See you later on.